On this really, truly an historic day for the markets, and oil was a big part of that. Oil prices roared back today, jumping more than 9% after sinking to their lowest level in 18 months earlier this week. Let's go to our very own Jackie DeAngelis for all the details on a big oil day. Jackie.
Hi there, Brian. Well, it was a big bounce indeed. Let's take a look at the day's range. That says a lot. The session low was 42.5. The session high was $47 even. 46.22 is where oil finished up the session. So it was up almost 9% on the day. The oil market's volatility is tracking what we're seeing in the stock market. They're moving hand in hand right now. But oil's been down for a few reasons. The fundamentals say there's probably still too much supply in the market, even with OPEC cutting. And this is a seasonally weaker period for demand. But then oil takes a second punch when stocks suffer because investors worry about future demand, global growth. Finally, lower oil prices then call into question the energy sector's ability to maintain its profitability. That drags on stocks again, as if there wasn't enough fear in the marketplace. Now, crude oil is down a little bit less than 25% year to date. That number looked so much more uglier before today's move higher. And of course, the energy sector has been struggling too. We've got to see how it shakes out, but it could be the worst quarter in history for energy. So take a look at some of the names getting crushed. They might have had a good day today, but Hess, Marathon, Schlumberger, Valero, Halliburton, the losses here are staggering, and the names show you that there's weakness across the sector, from big oil to the servicers to the pipelines to the refiners. Now, the question, of course, after a move like today's, can it be sustained? Investors got comfortable with prices a little over $50 a barrel. I think they're going to be happy with this point, with stabilization a little over 45, Brian.
Well, we're going to find out, Jackie DeAngelis, and we appreciate it. Thank you very much. Your next guest, well known to Jackie and our team here, says the sell-off in crude in the energy space is overdone. Helima Croft, head of commodity strategy, RBC Capital Markets, joining us now. First off, welcome.
Thank you.
Second off, what do you make of today's big rally?
I mean, there was really no bullish news out there.
No, that's the point. No catalyst.
No catalyst. So, again.
Why am I yelling? I've been up for 60 hours.
That said, Brian, you said earlier on the show that, the big problem for oil is supply. And so I think what we're going to really need to see as we get into January, what happens with the OPEC cuts? Do they materialize in a way that brings this market back into balance? I think that's the next sort of real story to watch in the oil markets from a fundamental perspective.
When we were in Vienna and they made the cut, you said on the air that if they didn't cut, we might go to the low 40s, high 30s. We went to the low 40s even with the cut. But what I think is important for people to realize is that these cuts have really not taken hold yet, have they?
No. I mean,
it's not immediate. It's not like tomorrow we cut. That's not how oil works.
They start the beginning of January. So basically we have a situation where all the supply remained on the market. We had the Saudis who pushed production up so high going into that Iran sanctions decision. And now it's really going to be on the back of Saudi Arabia to take back the summer surge.
Will they?
Oh, I think they definitely will. I mean, one story that got overlooked last week, Saudi's budget came out, and they're having a 7% increase in spending. Saudi Arabia's budget is based on an $80 Brent price. So the question is, can we get back there? But I think for the Saudi leadership, they're going to do whatever it takes to try to get oil on a firmer footing.
Isn't this just shuffling the chairs on the deck of the Titanic when we talk about oil coming back? And ultimately, we're going
Titanic was coal-fired.
Ultimately, this is cars are going to use less. We're 1% of EV today. That's going to grow exponentially. And yes, we can get a rally, but at the end of the day, there's a shift away.
Until we have the real shift away from oil, I think we're still, years away from that. I mean,
but it's coming.
It's coming at a certain point. We're still going to need oil, though, for transportation. We're still going to need, you're not going to be able to have an EV for a plane, obviously. So I do think that there's going to be an energy transition, but that's not the issue for the next couple of years. The big issue for
maybe a couple of decades, according to some people.
Right.
No offense. It is growing.
Disagree. I think
no, Gene, it's growing exponentially, but then you're going to. But the amount of cars that are electric is nothing.
Small percentage
of
the
almost
market.
Nothing.
But the thing is, it's about the future. It's about the intent to buy. It's about where that market share is going to go. I was recently in the UAE. Those people there, those sovereign funds are talking a lot about this trend. I think that.
Yeah.
Oh, and Saudis are talking a lot about solar panels.
No, and you think about, UAE, you make a very good point. I think their sovereign funds, they invest in EVs, they invest in the batteries, but they also make very big investments in conventional plays as well. So I think about a country like UAE, it's much more about diversification than a single bet on electric vehicles.
Fair.
But I think the big story, though, in terms of oil is going to be what happens with the U.S., because that's the kind of shuffling story. I mean, the more OPEC makes cuts, is that a lifeline to U.S. shale? And I think that's going to be a key story to watch for this year is what do shale producers do?
But that's the big problem. I mean, right now, can you hear that sound? That's capital spending plans being cut left and right for next year, which maybe is a bullish thing.
Maybe a bullish thing. But right now, you still have this sentiment that shale is going to overwhelm an OPEC cut.
Yeah.
I think actually this market will tighten. I think Q1 will be a bit sloppy, but I think the market is overlooking, I think, what's going to be the impact of the OPEC cut.
So, Helena, how important is this $40-ish level, right? We saw before oil consolidate there. When it got below it, then everybody was concerned that, you know what, some of these shale producers are going to go out of business. We're back there. Does this serve as kind of is there a fundamental support level to $40 in oil?
I mean, what we were looking for was that 42.05 we thought was going to be a key, one number to watch. If you fall below there, you really are going to start to see questions about, can shale producers sustain drilling for next year? I mean, the Permian can be more profitable, but you have these other plays that are not going to be profitable at all in this type of price environment. The question is, though, how quickly does that mean production will actually come down?
So prices going to go up in the new year, bottom line.
Yes, prices will go up in the new year, barring some major economic meltdown.
Okay, and Helima, we enjoy seeing you on the 5 a.m. as well.
Yes.
Don't get too comfortable.
No, that's my show.
All right.
Thank you.
Get up early. The early bird gets the oil worm. Helima Croft, RBC Capital Markets, thank you. So if Halima's right, and she normally is, if oil is heading higher next year, should investors be buying any of these energy names and stocks on the dip here? Pete Najarian, I put out loads of statistics on this. Some of these stocks are down 40 and 50% in 20 days.
Yeah, it's been an amazing, absolutely pounding of some of these names, Brian. But I think to Gene's point, I think if you go towards the integrated side of things, you do get a little more investment into the different alternatives that are out there, obviously. So, and I think that's an investment that they're slowly moving towards. It's a lot like when you look at what's going on in the marijuana world right now. You see the investments that are being made there for the future. Those aren't for really right now. Those are for the future. I think these integrated names, when you look at the cash that they're throwing off, those are the names that I'd be in. Now, they didn't react in a very violent way to the upside when we did have oil moving up as fast as it did, but we did see them start to fall back pretty fast. I think those are the names to be in when you're considering what kind of move do we expect out of energy. And from what I heard from Helima, it doesn't sound like we're looking at something that's going to spike. It sounds like something that's going to start to percolate and start to move to the upside. If that's the case, I think the integrated names are the place to be.
So, Pete, what do you think about the super majors? What do you think about the refiners right here? Because those are names that we're looking at, or those are spaces we're looking at, because we find a lot of value there.
Yeah, I agree with you. And as a matter of fact, I've done some adding here and there, but I've already had positions on in something like an Exxon and Chevron and some of those names. I got very little beta on right now. I've got one, Diamondback, which is FANG symbol. But outside of that, there's a name that I was staring at today, and I'm just looking at it. I can't believe the level that it's at, and that's Valero. So you talk about refiners. That's a really interesting name here. And when you look at what their balance sheet looks like, what they look like as a company going forward, I think that's one of the names that's absolutely been sold all the way. I mean, incredible selling in that name. I think there are opportunities out there. That would be one of the names. If Halima's right in terms of the direction and what sort of energy push we've got, I think that's a name that could do very well.
Well, I'll just jump in on that one, guys. I hear you. Crack spreads changing, but be careful on this IMO, International Maritime Organization 2020 rules. I know it sounds insane. Has to do with the change in sulfur content on diesel. It's one of the reasons refiners have acted a little bit bizarre. We'll do more on that early in the new year as well. Pete Najarian, thank you very much. So, Chris, you guys, when you say looking at, I assume you're looking at because you think these refiners, which have been hit as hard as any group in oil outside of the offshore names, are a good value.
We do think they're a good value. So we run a model portfolio. In that model portfolio, we have refiners, we have some of the super majors, and we think there's good value there.